Hello and welcome back to Sydney Direct. I'm Natalie MacDonald. Now those Oz inflation numbers are out and my next guest, Henry Jennings of BBY Ltd, is going to give us the lowdown. Henry, thank you very much for welcoming us into your offices today.
Pleasure.
Okay, so firstly, those Oz inflation figures have come in at a drop of 2.3%. Given that prices worldwide are softening presently, where does Australia sit in terms of global economic context?
Well, I guess, those inflation numbers we had today were bang in line with kind of the RBA's target range, which is between 2 and 3%. So we are seeing some deflationary pressures coming through, especially from the taking away of the carbon tax, which has been a positive for the inflation number. So in terms of the global complex, we are seeing inflation sort of becoming less of an issue around the world. In fact, we've got more of a problem now with deflation, especially in Europe, and we're seeing that in Japan as well to some extent. So deflation is probably more of a concern, and we are seeing a little bit of that in Australia.
Could markets be set to gain then from today's report?
The market was relatively sanguine about today's report. We didn't really move. We've had a very, very big bounce off our lows that we saw a week or so ago. The market bounced very, very hard, especially in the banking sector and other financials. And we've even seen a good bounce in material stocks. So we have bounced from sort of 5.150 to around 5.4, which has been pretty aggressive, I guess, if you could look at it in those terms. So whether the bounce will continue back up towards that 5-6 level, we'll have to wait and see.
Now, there's been some discussion that a falling Aussie dollar could, in fact, cause international investors to pull out of local share markets and pushing more pressure downwards on stock markets. Is this something you're seeing evidence of already?
I think we saw a lot of the international guys leaving our market when it was 5,600. We saw the Aussie dollar fall from around 90 to 84, and that tends to be the international guys getting out. I think now with the Aussie dollar around where it is, it's actually starting to look attractive for some of these international guys to actually get back into our market, and some of the yields, especially on our banks and our Telstra and other things like that, have been quite attractive, not only for local investors but also for international investors too. So I think we're seeing some of the international guys come back in again. After all, we're seeing free money being printed again around the world, and we've even had talk about QE4 from the Fed in terms of more money printing from them, or at least not quite so much of a stimulus withdrawal anyway.
Now, lastly, Henry, you recently commented that bank prices were looking quite high in comparison to their overseas peers. Can you expand on this pattern a little bit for us?
Well, I guess, for a long time, overseas investors have seen Aussie banks as a real play on our housing market, and everyone is very well aware that the Australian housing market has been very bubbly and very bullish, especially in the capital cities like Sydney and Melbourne. So I think, overseas investors have looked at our banks, that they're expensive compared to their overseas peers, their global peers, and they've used them as a shorting tool against the Aussie housing market. Hasn't really worked, I have to say. And the Aussie banks are yielding nearly close to 6%. Fully franked. Their numbers are coming up. These guys, there's 4 of them that dominate the Australian landscape, and they make $30 billion in profits between the 4 of them. So it's a pretty good business. So there's probably a reason why they're expensive globally, but they are trading at sort of 2.1 times the net tangible assets, whereas overseas banks tend to be around 1.5. So you could argue they're expensive, but they've always been expensive, and they probably always will be.
Henry, thank you very much for your comments today. Much appreciated.
Pleasure, Natalie.
Coming up this week, I'm going to be talking to Katrina L of Moody's Analytics, but don't go away, as the Dukascopy TV team have plenty more exclusive insights coming up for you right here on Dukascopy TV. For now though, it's goodbye from Sydney.